The Bay Area housing market has been on absolute fire for the last 12 months or so, but we're starting to see in the South Bay signs of a slowdown in particular cities in the marketplace. And so that's what we're going to be covering on today's Bay Area Housing Market Minute. There are so many possible interpretations for what is going on in the Bay Area housing market at this point in time, but it's important to note that there are some leading indicators, if you will, of a potential slowdown in some South Bay cities in the Bay Area housing market. One particular city that we're starting to see this in is actually in Morgan Hill, which traditionally over the last 6 months or so has been absolutely on fire. But before we go into the data, if you are a home buyer in today's Bay Area market and you're looking for a comprehensive data set to assist you in your home buying decision making, you can go ahead and text the word data plus the zip code or neighborhood or area that you're looking in, and we will send that data straight to your email inbox. And if you are a home seller in today's marketplace and you're looking for a data set to assist you in your decision making and or pricing your property, you can go ahead and text the word data plus your property address to the number down below, and we will send that straight to your inbox. Starting off with some good news for the Morgan Hill marketplace. For the 9th consecutive month, we are seeing sales price to list price ratio exceed 100%, which is a telltale sign of a white hot seller's market. 9 consecutive months of the market building on top of itself. And that is great news, obviously, if you have a stake in the Morgan Hill real estate market at this point in time. If you're a homeowner, you own multiple properties, great news. You've built a lot of equity over the last 9 months. 104% sales price to list price ratio in the month of July. It will be interesting to see if some of the leading metrics cause that to slip below 100%. If you look at your screen, you'll notice that for the first time in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 months. 13 months, we are seeing pending sales under, less than the amount of homes that are on the market, meaning that for the first time in 13 months, we are starting to see pending sales or demand be actually a little bit lower than what the inventory levels are. And by the way, this is not necessary. We don't need to see pending sales exceed inventory levels in order for it to be a white hot seller's market. In fact, we only need to see about 33% or so in order to 33% of the active inventory. So if we had 100 homes on the market, we'd only need to see about 35 to 40 pending in order for it to be like a reasonably good seller's market, healthy. This is way more dramatic than that. But it's interesting to see this not just little, but sharp decrease in pending activity levels. We went from 90 in June to only 45 pending sales in the month of July. That is dramatic, to say the least. And so it will be fascinating to see what this does to the marketplace in the months to come. Now, a couple things to note. Number one, I've said in previous videos, I've said this in many of my videos actually, that in the month of June, July, August, we see the summer slump, the summer slowdown in the Silicon Valley marketplace. This is not new. This just didn't happen last year because COVID messed the whole market up and pushed the spring market forward 3 months. And so what was actually took place in the summer last year was actually the spring market of 2020. But now everything is starting to normalize again, okay? And it's starting to behave a little bit more like normal. So it's interesting. It'll be interesting to see if these numbers recover or if we continue to see pending sales slip. If we continue to see pending sales slip, this could spell signs of a potential neutralization in the marketplace for Morgan Hill. Now, a couple things to note. Inventory levels. We were in the month of July only at 0.6 months of inventory based on closed sales, which means that in order to achieve a true neutralization in the marketplace, pending sales were to stay the same. If they were to stay at the same number that they're at month over month over month over month, or rather if closed sales, not pending sales, closed sales were to stay the same where they're at right now, we'd have to have inventory levels go up by 5x 5x in order for us to reach what economists would consider a neutral market. So yes, the market might go down a little, might neutralize a little bit. Yes, it might take not 1 week to sell your home. However, we are still a far cry away from any sort of doom and gloom scenario for the Morgan Hill market. Another thing to pay attention to is this absorption rate. The absorption rate right now in Morgan Hill, based on closed sales, is at 166%, which means that if inventory levels were to stay the same, demand would need to drop literally 130 points in order for us to see a neutral market. So we, again, I want to say it, we are not anywhere close to what many would consider a free fall or a massive correction in the marketplace here in Morgan Hill. However, it's important to note that if these trends continue, especially the free fall in pending sales, because that is exactly what it is. It's not like just a little like dip. It is a free fall in the marketplace in Morgan Hill. So if those numbers continue, then yes, we will absolutely start to see signs of a slowdown very, very, very soon. But if this is just the traditional summer slump, might not be so soon. But you can rely on the Bay Area Housing Market Minute to keep all of you up to date and informed with what's going on in today's Silicon Valley marketplace. This is Danny Gould, everyone, with the Selling Silicon Valley Group, and I will catch all of you in the next video.